Good evening to you all over here again. This session is really going to be about finance. And as soon as I hear the words finance or sovereign gold, sovereign green bonds, etc., I understand that topics might seem a little daunting or heavy. So one of the things that one of the requests to each of the panelists is also going to be to try and keep this conversation as educative as possible. The idea is really going to be to unpack any sort of emerging trends that we're going to be discussing about. Explore what financial innovations are happening currently, to basically explain it to the audience and bring everyone up to stage, and then push it one level deeper so that everyone's walking away with a deeper insight into what's really happening globally as well as domestically. So very quickly to introduce the topic to everyone. As India is advancing in its climate goals, there is a need to balance urgency with optimism. India has certainly made a lot of strides when it comes to its a move towards sustainability, whether it be agreeing to things in the Paris Agreement or the Science-Based Target initiatives. Things have started moving. Even as far as compliances go for corporates, we've moved from a voluntary disclosure to a mandated disclosure through BRSR, which now even requires organizations to get third-party assurances. So the whip is definitely being used, and we see significant movement happening because of that. Even as far as other policies go, there's a policy by the Airports Authority of India called E-Sugam, where all small and regional airports are now becoming renewable energy, are using renewable sources of energy, and over 100 airports are already doing that right now. In fact, so we're seeing this movement across the board, is basically, and this has also been echoed through the ambition that India has placed through its Panch Amrit goals. One of the previous speakers also spoke about how we want to reduce 45% reduction in carbon intensity and increase renewable energy to about 50% in the energy mix for the country. While these things are happening domestically, there is also a global movement, and India is also getting pushed by policies that are being created and rolled out in other parts of the world. One big example of that is the EU Carbon Border Adjustment Mechanism, which is pushing all the supply chains which feed into the European markets to now start complying to sustainability norms as well. And while that's only looking at some of the larger, more fundamental businesses, feedstock and input businesses, it's likely that it's going to get rolled out for smaller and smaller businesses in the future. So the first theme that we really want to talk about is to figure out what are the signals that India is sending to the world, what is the sort of credibility that India has built out for itself as it moves along this particular trajectory, and what are the system readiness levels like. So my first question, Amit sir, is going to be to you. So this is primarily about policy, and in just a few years, India's climate policy has moved from ambition to architecture. So it's no more just global, it's actually affecting things as they are running today. New disclosures, green bonds, carbon market pilots. We want to just reflect on what's worked so far and what actions can really propel us into the next phase of this particular transition. So my question to you is, looking across policies, according to you, what are the 2 or 3 big policy actions that have acted as key enablers for the sector in the past 2 or 3 years? And what are the 2 or 3 policy actions in the next couple of years that are going to make the system more robust?
Yeah, so thank you so much for inviting me here, and thanks for the audience to be present here. I think it's a very complex mix of things which we have to look at when we talk about the financial inclusion or the finance availability for the sectors which are related to climate and climate tech and climate related aspects, and also to the sectors where climate related regulation, the non-tariff barriers start affecting them, like CBAM you talked about. So the financing could be explicit, it could be implicit. By explicit I mean that when we actually go out and roll out things like green bonds, which help generate finance for some things which are explicitly green. There could be certain activities which the government of India does, like PLI scheme, which is not explicitly a climate finance scheme, but it could be helping us make solar panels in a more efficient way, which is going to subsequently drive the green innovation. which will help us meet the requirements of the CBAM. So I think there are many ways with which we can look at, and there are multiple policies which actually flow into this climate finance mix, what I would call. So to pick at the top, I think you've already mentioned BRSR. I think it's a great place to start with, because I think regulations are binding. I don't think regulation should be the primary way to drive this. It has to come from the corporates itself, because they are both they are at the receiving end also because of these tariffs, but they're also the ones who are producing much of the emissions, and they are in the position to make a change significantly. So these kind of disclosures definitely help. BRSR, it's ESG in the world and BRSR in India, and it has been embraced by many industries who have shown that it's okay, it's possible to be profitable while we are dealing with these kind of things. So I think the regulation should not, you mentioned about WIP, I think it should not be considered in that sense. I think it's something which should come naturally to the corporates, because that is also the demand across the world when you're supplying, when you're exporting to Western world. I think that is there's a strong requirement of grading your products as sustainable themselves. So I mentioned the other part as sovereign bonds themselves. It's more oriented towards agencies which do not have the capability to raise the funds otherwise. So probably the sovereign bonds would be, an ideal candidate would be some municipal corporations who have to do some climate readiness work in their own areas. So those are more appropriate for that kind of agencies. The CCTS has also come in as an important player, but the precursor to that, what you asked, what has worked. So if you look back and see the renewable journey of India, I think that has been very, very impactful. And one of the drivers was also REC-based mechanism, the Renewable Energy Certificate trading mechanism, which allowed it to function efficiently. So there are multiple mechanisms at different levels which have worked in the past, and I think it's not fair to pick out one or two out of these. I think the whole because world is a very fast-changing place now. We talk about CBAM, but CBAM is nothing in front of what we are seeing through Trump tariffs right now. So it's a dynamic world. Things keep changing, and I think we have to be ready for all kinds of tariffs. It's just that we need to be more efficient, more climate compliant, and that will keep us ready for most of the challenges to take on. Thank you.
So you've covered things that have worked. I would really appreciate if you could cover things that you think are required going forward as well,
Yeah, so one of the things I think is a very robust MRV system is what is required in India. I think one of the major failings of all these compliances is greenwashing, both by corporates and also to some extent by the governments themselves projecting a bit more than what they are doing. So a robust MRV system which is able to, the monitoring system and the verification system which is able to look at various aspects. It should be both in CCTS or let's talk about circular economy. There is a EPR system, extended producer responsibility system. And all of these systems, I think there's a compliance issue in India which needs to be made robust. So that's one. And the second part I would say would be also making the accessibility of finance to the states. I think the states are in a very, in a condition where their financial health is not the greatest. In NITI, we recently came out with a financial health index of states, and we've seen they're all strained except for top 4 or 5 states. None of them are in a position to really come out of it very well. So, and most of them are exposed to a lot of disaster risk. So, getting finance for them from MDBs and from the multilateral institutions, I think that is an area where we really need to work on.
Interesting. So moving on to from local policies, moving on to a global perspective, Mr. Jena, from a global vantage point, where does India really stand today when it comes to sustainable finance? What signals are building international credibility, and what are the issues that are still raising some questions? Going one level deeper, how should India balance ease of use for banks and NBFCs with strong guardrails against greenwashing so the taxonomy becomes practical rather than just a tick box exercise?
Yeah, I think you see India as an investment destination in the green energy or green related sector. It's an attractive market. I believe in the last 3 to 4 years, if we see the kind of FDI flow came into India, let's assume renewable energy. I think in last year India attracted close to 50,000 crores only for the clean renewable energy companies in India. It means that it's a very, very attractive market, close to 8 to 10% of total FDI is coming to renewable energy. So you can see all the varieties of private equity players, large pension funds and institutional investors, they are participating in green companies as an equity investors. It is not restricted to equity investment. Even if there are several foreign banks, they are also participating and providing debt financing to renewable energy companies, which is basically signaling that India is a safe market for foreign investors to India, in the country. Secondly, if we talk to many sovereign wealth fund, we are definitely need those classes of investors. One of the reasons is that when we're talking about green companies, they need long-term financing. When you need long-term financing, we cannot rely on India's commercial banks for a long time. We need sovereign wealth fund, we need foreign pension funds and domestic pension funds, and for this country, for our green transition, both for debt financing as well as equity financing, which is necessary. So the kind of challenges they are facing, one massive challenge is definitely taxonomy, and it's a good sign from Ministry of Finance. There is the consultation process still going on, that they will come out with a green taxonomy very soon. Although they came out what it's called guideline or framework, not really a taxonomy. So once the taxonomy is out, and we also need to see that how the updated taxonomy is aligning with international best practices, including the European Union, because most of the investors in European Union, they would like to invest in companies or financial products which are following the guidelines by European Union. I would also like to highlight another point here. Although, there is a MAGA issues going on, so there is so much of the political unwillingness in several countries, particularly in the United States. But if you talk to investors and corporates, even there are research also going on, that they have not really stopped investing in climate space or green energy space. In fact, yesterday there was an article in Bloomberg, and they say the article shows that in the last 6 months, since Trump came into White House, the green energy stocks, there is an index, they outperformed the S&P 500 significantly. So it means that there is a lot of interest of investors to put their capital in green stocks or green companies. So it means that there are opportunities for Indian corporations to attract this kind of capitals. Even we are also conducting a study with Niti Aayog, trying to find out that whether our financial system is enough, has ability to provide enough capital, both debt and equity capital, to bridge the financing needs required for India's green energy transition or net zero. And we are not finding that, there is not enough capital available. It means that we need foreign capital. For example, in 2024, out of total sovereign wealth fund deals happened across the world, and 10% of them happened here in India. Out of that 10%, close to 20-25% happened in clean energy space. It shows that there is a lot of opportunities. I also agree with Amit regarding the greenwashing. It's a big risk, not only in the real corporation, but also in the financial corporations as well. Because if I see the number of greenwashing per year in the last 5 years is close to 6,000. It's a massive number. Basically, we are fooling the investors that we are using the money and putting the money in assets, which is not really creating any environmental impact. We need to mitigate this serious greenwashing risk. And the challenge will be for the taxonomy, how to convert that into financial sector. Minister of Finance may come out with a taxonomy. The taxonomy will be applicable for the real economy. But the issue will be when this real economy will be converted into a financial product. Because when we are talking about foreign investors, particularly foreign portfolio investors, who are likely to invest in bonds and stocks, they are not directly investing in companies to understand that whether the companies are putting capital in green businesses. They would invest in green stocks or green bonds. They may not realize that where the proceeds of the money are going. So it's important that the real economy or the Minister of Finance to understand that when the financial products created from this taxonomy, that it's appropriate or not. It's a massive challenge, and we need to find a way. And here SEBI is going to.
Understood. I'd like to welcome Mr. Priyank on stage. Thank you so much. What I'll do is, we'll move now from the policy standpoint and something that we've discussed from the global aspect as well as the local one, to moving to the finance piece of this. So as a leading global bank, HSBC has really been at the forefront of transition finance and sustainability linked lending. Mr. Kuchal, so with the role that the HSBC is playing, how do you view the evolution of India's green bond market particularly, and what lessons do you think it can draw from the global north?
Yeah, thank you. So India's, green bond market and sustainability-linked bonds, they have taken a leapfrog over the last couple of years. To give you a statistic, the number stood at close to $56 billion as of December 24, which is quite a jump of close to 186% if you were to see over the last 3 years. So definitely there is a significant interest in terms of interest and appetite of the investors in this particular segment. I think some of those key reasons which have helped the Indian scenario in terms of this evolution of the bond market is predominant things like, clarity in government policies, strong off-takers being, so to give an example, in the renewable space, there are strong 4 off-takers which have been put in by the government in place, which is SECI, NTPC, NHPC and SGVN, which give a lot of comfort to the investors to be able to invest. So a lot of clarity of policy. At the same point of time, the one is this, also they've kind of also solved for, and they're still trying to solve for things like transmission, connectivity, which are something, a clarity of thoughts and clarity of policies is very important for success, for success in this sector and to attract foreign investors into this particular piece. So that has been a key determinant, as well as, corporates choosing to go towards sustainability plans, in adopting sustainability linked goal plans. That has also gone in a good way to be able to put this further forward.
Understood. So just a quick follow-up from that. I think a lot of the applications that you mentioned were really around renewable energy, around transmission or things related to renewable energy. I think Mr. Jana also mentioned that there is a bit of a concentration when it comes to where these funds are being utilized. Would you just reflect on why that could be happening, and how do we step away from that going forward, since there are going to be so many applications for the funds that are required?
Yes, you're right. There are actually fundamentally 3-4 key factors which are actually driving this. The sector maturity, robust policy support, clear revenue models, and alignment with India's own net zero energy security goals. So these are some of those key reasons why you would see. So broadly, if you see, almost close to 50-55% of the overall piece is going actually towards renewables, as you rightly pointed out. Electric mobility and battery ecosystem is contributing to close to 20%, and as all of us are aware, it is a growing segment. We are seeing more and more adoption of EVs, government policies towards both either registration cost or ease of business towards promoting EVs is helping this particular matter. But there is a lot more to be done. So the green hydrogen clean fuels is one piece which is being driven by the National Green Hydrogen Mission. But things will take its own pace. So sectors like energy efficiency, as well as green infra waste, are actually respectively only close to 20% and 10%. There's a lot more work to be done. But at the same point of time, we should also appreciate the fact that India has set up very ambitious targets of 500 gigawatts of renewable energy by 2030. By virtue of putting out these strong policies, these incentives, we are working towards ensuring that we are, so even if we don't hit 500, we'll be very, very close to that particular target by virtue of the amount of investments that are going on across the sector to try and develop it more and more better and make it more and more attractive for the foreign investors.
Understood. Now moving on to Sandeep. So the resilience or the transition, the climate transition that we're all in the middle of, is not just a policy and policy issue. It's clearly a financing one. And Sandeep operates at a space where the rubber really meets the ground. The question to you is, if the goal is to move from dozens of pilots to thousands of climate resilient loans, banks and NBFCs will be pivotal in scaling finance sustainability. What efforts are currently being made by these institutions to mainstream climate finance? And how does GIZ India help catalyze this particular shift?
Yeah, thank you, and great to be here. So, the banking sector over the last, I would say, 3 years has clearly got a signal that there will be more and more regulations. The banking and financial services, I mean the NBFCs and the banks, that there will be more and more regulations. There have been a few, but I don't think anybody doubts that there will be a lot more regulations coming in related to climate space in the financial sector. So therefore, over the last 3 years, and you know the segment is highly regulated, it needs to be so. Our deposits, I don't think anybody would want our deposits to be unsafe. The reason why it's so tightly regulated is that our deposits need to be safe. So, since the regulation has given clear signals of a lot coming, the segment has become a lot more friendly and amenable towards having assets which are in that direction, and also looking at what are the risks and how do we avoid. I would say that looking at the risk is taking precedence over looking at certain assets. You know, first you make yourself safe, and then you see how do you earn more. Right? That's
fundamental.
That's fundamental. What are we as an institution doing? We quite a few things, and so in the circular economy segment, we have tied up with the Small Industries Development Bank of India. So we have provided some capital for what is known as a risk sharing facility. So it's 50% credit guarantee. So if the company defaults, our capital parked with SIDBI takes the hit. SIDBI doesn't has a hole on its balance sheet. That's what when it came into being in 2022. Circular economy was sometimes a wishy-washy vague thing. Oh, it's very aspirational. That was the thing. Till that time, from that time, this risk-sharing facility has been able to facilitate loans to 7 different companies, totaling around 35 crores. And which includes loans given by banks like HDFC Bank, so the mainstream banks, the ones which keep our deposits. So this is one instance of, and now currently there are 21 applicants for that guarantee facility in queue, wanting to use that. So from a time when it was, a lot of people used to say, is that an industry? Is circular economy an industry at all? To 35 crores is some distance, and 21 applicants is some distance, which we have traveled in 3 years. It's been a huge struggle. For a bank, it says, very often we found there were pushbacks based on commas and full stops and semicolons and exclamation marks, not really credit concerns. And as an expanser, I could make out that there's no credit concern, but the concern is, this is going to be once in 5 years. Why the hell should I bother? Why should I try to learn the industry when it will not generate repeat business for us? So that is the stage we are now. There is a need to give the message very clearly that this is not a one-off business. It is going to come. So this is one instance of what we are doing. We are working with Equitas Small Finance Bank. I think we mentioned about RBI's focus is highly likely to be on the risks first and the opportunities later. So we have worked, and it's WIP right now, so I can't disclose what's the stage, but we identified a firm which has broken down physical risk into 14 different components: floods, droughts, snowfall. There are 14 different categories, and has mapped the data to be for any geography to be able to score for that geography. So the bank's portfolio, its business and its geography has gone, and then this thing has come, an analysis has come, mapping out risk, and now we are working out how does the bank now integrate it with its regular credit appraisal. That's what we are into. Very nascent. And
that seems to be the next challenge.
yeah. So that's there. And I'm very happy to see, when we started this, we were hunting around for somebody who can provide this. And there were many claimants who were doing Havebaji. There were many claimants whom we felt are not correct. I'm so happy to see that Cognitude, there's a stall there, and they have done a pretty good job of somewhat very similar. Instead of 14 factors, they have 18 factors. They have the ground level data and have mapped for every geography. So I'm very happy to see that even in India, we have firms doing this. Currently, we are working with a firm based in Netherlands for the IP.